Hello, in this presentation, we will write checks for payments within our bookkeeping problem in Excel, keeping in mind how that same information might be input into a computer system such as QuickBooks. We'll take a look first at the QuickBooks system for writing checks and then jump over to Excel and enter those same transactions within our Excel bookkeeping. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. Problem. First, we're going to have a write check for an insurance company. So we're going to issue a check or write a check for our insurance. Within QuickBooks, we could just select the write checks item that could be found on the home page and in other pages. And we're just going to say write the check. This is one way we can enter this data. There could be multiple ways to enter the data into QuickBooks. We could, for example, go into the register as well. But once we go in there, we're going to see something like a check, and we're going to put in the check information in order to write the check. We're going to put, in this case, the insurance company, Safe Insurance Company. If we had not had this company there before, we'll have to add the company as a vendor. This is necessary for QuickBooks in order to automate the system of not only having a general ledger account for the payable account, but a subsidiary account, something we'll have to do and create by hand when we put this information into our Excel worksheet. So once we set that vendor up, then QuickBooks will just be able to generate not just a general ledger, but a subsidiary ledger. So that's the key component for QuickBooks to be able to do that. We'll see that once again as we put the information into Excel, what we need to do in order to have that dual tracking. Then we're going to have the check here. We're going to write the check information, the amount of the check. And notice we're in the items tab, the expenses tab. And instead of the items, it's not going to be an inventory items, but an expense. We're typing prepaid insurance instead of insurance expense because the insurance is going to be something that we have not yet consumed. If this is a new account for QuickBooks, we'll have to add that and set that up. Note too that even though it says expenses over here, we will set this new account up as an asset. It's an asset account. So this terminology that QuickBooks uses is not quite accurate because anything other than inventory is in essence going to be in this expense area. It's probably going to be an asset or an expense. Expense, most common assets could also be included. Then we're going to set that up. It's another current asset type account. We're going to already have it set up in our Excel system, meaning it'll just be an account in our asset section. And then here's the full check, which of course is going to look most like a check. We're writing the check to Safe Insurance Company to pay for our insurance. The amount is $11,000, date 1/28, and the other account we need to put there. This is something that is not always there when we write a check, and it's not always there in our checkbook. We have to put the other account, the account that it's going to. We know that by the fact that it is a check, it's reducing cash, and then the other side of it is going to be prepaid insurance, which will be an asset account. And then of course QuickBooks will record this transaction, decrease in the checking account, and record in the other side, which will be an increase to the asset account of prepaid insurance. We'll go ahead and see that process as we put this information into Excel. We will now put this same information into Excel. We're going to have a new journal entry on 1/28, and what's going to happen is we're writing a check. So if we go through our questions, we're going to say that first, is cash affected? We're going to say yes, cash is affected, and it is the checking account. The checking account is going down. We are writing a check. The checking account has a debit balance account in it. We will do the opposite thing to it in order to make it go down. So we're going to copy the checking account. Going to right click and copy that. Going to put that on the bottom so it's in cell Q15. Right click and paste 1, 2, 3. We're then going to go to the Home tab up top. We're going to go to the Alignment group and increase the indenting. The amount is going to be 11,000, so I'm going to be in cell S15. We're going to put a negative to represent a credit of 11,000. And it's a little too small of the cell, so I'm going to widen these two cells. I'm going to put my cursor on the R. I'm going to highlight both the R and hold down and go to the S so that we're going to have the two cells, or the two columns of cells, will be the same size. And then I'll put our cursor right in the middle so it looks like that, not like that, but like that, not like that, but like that. And then we'll widen this out just a tad until we can see that whole information. So there we have the 11,000. Note that we are thinking about cash first, even though it's not the debit, even though it's on the bottom of the journal entry, because it's the easiest thing to think about, and it helps us to think about what the other account will be doing in terms of whether it will be a debit or credit. So we know we're going to debit something else. We could just type in 11,000. I'm going to put negative of this number, kind of our plug formula, the opposite of that number, and we just then need the account. We're paying for insurance, so we might think that it should be in insurance expense, but we're really paying for a lot of, like a year's worth of insurance. If we were to put it into insurance expense here, it would reduce this month's income a lot, significantly, and more than it really should under the matching principle, because really we're paying for 12 months of insurance, I think we said, or more than 1 month of insurance in any case. And therefore, we should be putting it into the asset account and then using our adjusting process in order to reduce the prepaid insurance as it is consumed over time. So we're going to put it here into the asset account. So and it's an asset account. Assets have debit balances. We're going to make it to go up. We have more of an asset, more of insurance that we get to consume over time without paying for more of it. And therefore, we are going to do the same thing to it, which is another debit, something we already knew by doing the cash first. So we're going to right click on this prepaid insurance. We'll put that in cell Q14, right click and paste 1, 2, 3. We're then going to just post this out. In order to do that, we're going to freeze the panes first. I'm going to scroll all the way to the top, put the cursor in AJ1, go to the View tab, Windows Group, and freeze panes, and freeze the panes. We're then going to post the prepaid insurance. Prepaid insurance is, what is that, the fourth account there? Therefore, will be the fourth account on the general ledger. We're going to scroll over till we see that fourth account. It is right there in cell AU8, AU8. And we're going to say that that equals, and then point to that 11,000, increase in the balance from 0 to 11,000 in the debit direction. Scrolling back to our accounts over here, we see that amount in 11,000 in AK8 in prepaid insurance. We're then going to record the checking account going down. Here is the checking account going down, and it's the first account, of course, on the trial balance, first account on the general ledger. So we're going to be here in AN19, AN19 equals, and then we're going to point to that checking account journal entry, 11,000, and that'll bring the balance down from 126.86 to 115.86. That then will also be on the trial balance as well. We're going to look at one other check and post one other check here. First looking at QuickBooks and then going back here, posting it. Then we'll take a look at the effect on the trial balance. We're back to a quick look at QuickBooks, and we're going to write another check for staples, 2 staples for supplies. So we're just going to write a check for supplies. We're going to select that same check item, and then we are going to start entering this data. Once again, if the supplies is a new vendor, we're going to have to add that new vendor. And when we add it, it's going to be a quick add. We'll just add the vendor. Now we're just going to write a check right now, so QuickBooks doesn't need to track the vendors at this point. But if we were to purchase it on account, then QuickBooks has that information and is then able to create a subsidiary ledger. That's really the point, or one of the major points, of QuickBooks having these vendors. We cannot record something to something like an accounts payable account without a vendor, and this will help us to QuickBooks to be able to just build that automatically. When we post something to accounts payable, we will have to record it 2 times in a similar way as we have done with the accounts receivable account. So then we have the supplies. So this is the information. This is the check. We're writing it to Staples, $500, date 1/28. It's going to be an expense. It's in the note that if you're working some book problems, they may put the office supplies into an asset and then have a adjusting entry at the end of the month to adjust it in a similar way as we might do inventory on a periodic inventory system, meaning put the stuff into an asset account and then count it, and then reduce the asset account for supplies to be in accordance with the physical count. This is something we would definitely do if if the supplies was significant. If the supplies are not significant, meaning they're immaterial in relation to the sales, then we may just do this easy thing, which is to expense it. So for this problem, we're just expensing the supplies. So that means that this is going to, QuickBooks, when we record this check, will decrease the checking account by the 500 and record an expense, increasing the expense by the 500, decreasing net income. Let's see how that looks on our worksheet in Excel. This transaction will be as of 1/28, so 1/28 is the date of the transaction. First question, is cash affected? We're going to say yes, it's going down. We wrote a check. The checking account has a debit balance. We're going to do the opposite thing to it, which in this case is a credit. So we'll copy that. I'm going to copy the checking account. Going to put that on the bottom of the journal entry in Q18. Right click and paste 1, 2, 3. We're then going to go to the Home tab, Alignment Group, and increase the indenting. The amount then is going to be 500. Going to put that in S18 with a credit or a negative 500. Then we know that we're going to debit something, so we're going to just put that debit in place at this time in R17, negative of that 500, and enter. So there's going to be our transaction. We just need then the amount or the account that will be debited. And that will, of course, be the supplies. Now remember, we're going to put this not into an asset account as may be done in many book problems, because it's often used as an introduction to tracking inventory on like a periodic inventory system. But we're just going to expense it, and the assumption there is that it's going to be immaterial, and then expensing is kind of the easier thing to do when that is the case. So we're looking for a supplies expense, so we're going to put it, in this case, into office supplies. So office supplies, so we're going to copy that in AJ33, right click and copy, and that will be the account in Q17, right click and paste 1, 2, 3. So here's the journal entry that we journalized into the general journal, and now we'll be posting it to the general ledger. We'll post the supplies expense first, and that's going to be way down here. So notice it's in order: assets in green, liabilities, equity, income, and then expenses. And this is way down at the bottom of the expenses. It's going to be in the same order on the general ledger. So we're going to go all the way over to those dark blue accounts. We've got the green asset accounts. We've got the orange liability accounts. We've got the light blue equity accounts. We have the dark blue income and expense accounts. Looking for the supplies. So supplies, scrolling down. Where are the supplies? Office supplies, cost of goods sold, bank charges, depreciation, insurance expense, interest, miscellaneous, office supplies. There we go. So we're in office supplies over here in BS8, and we're going to say that that equals and point to the 500 in R17. That will increase the balance from 0 to 500. That 500 then should be found on the trial balance. So if we scroll back over to the trial balance, we will then see the 500 down here in the expenses. There's the 500. We're out of balance by 500. Note that that 500 is also bringing down net income. Net income calculated as the credits of revenue minus the debits of expenses. This being a debit of expense, decreasing net income. Then we're going to record the other side, that to the checking account. So that's going to be a credit. So there's the 500. That's our first account, of course, in the trial balance, and therefore the first account, of course, in the general ledger. Scrolling down to that account, next balance in it, in AN20, we're going to select equals and point to that 500 in S18. This $515.86 is going to go down by the $500 to $514,586. That $514,586 also found on the trial balance. That then puts us back in balance down here, and we are good to go. So now we'll take a look at what is happening to the financial statements. The financial statements being generated automatically through this process. In order to do that, we're going to first unfreeze the panes. So I'm going to go to View, View, and Windows Group, Freeze Panes, Unfreeze Panes. And then we did something to the checking account, so I'm just going to point to that and see how that automatically updates the financials as we have it set up now. We did something to the, what else did we do something to? We did something to the supplies account. So we'll go ahead and look at the supplies account, And we also had insurance, I believe, was the other. So we had prepaid insurance right there. So let's scroll over to the financial statements and see what those look like at this time. Scrolling to the right till we find the financial statements. We see this information. We see that cash has been updated. There's the prepaid insurance. Total assets here equaling total liabilities and equity. And we see that there was an effect on the income statement, that of the supplies at 500, bringing net income down to 225. That net income also found on the statement of owner's equity, 225, that being part of the calculation for ending owner's equity of 150,622, and that amount is on the balance sheet at 150,622. You might be asking, hey, I don't really see this number on the trial balance. Where is that coming from? And so let's take it like 150,622. How would we calculate that? Scrolling all the way back to the trial balance. That is, because you might be saying, well, it's not this number. 150,397 isn't the number we looked at. Because remember, the ending balance is going to be all of this. So if we were to add up all of that, 150,622. So the ending balance on the balance sheet is all of this. This balance is typically the beginning balance, which was the ending balance of last year, not including all the other stuff that's going to be included in it, and or investments that were included. We can also get to that number by assets, debit, minus liabilities, credit, minus, and that'll give us 156.22 as well.